Let's kick things off with raising capital for junior miners. So, it's really about crafting a compelling geological story first, like securing a solid land position and building a robust NI 43101 or JORC compliant report.
Absolutely. Right, that foundation really sets the tone. It's all about showing you've got potential minerals like gold, copper, or even lithium.
Exactly. It's like telling the narrative of your land's promise, and then step two comes in assembling a credible management team. Think geologists, engineers, financiers, actual experts who build investor trust.
Yep, that's key. But what if the team lacks direct discovery experience? Don't you think that could raise eyebrows with investors?
Well, it definitely could. They need real track records and transparency. That's why having a balanced team with strong discovery or development experience is crucial.
Makes sense. Moving along, the next big step is having a clear exploration or development plan. That usually involves timelines, milestones like drilling or resource estimation, and even exit scenarios.
Right. Think of it like charting a roadmap. You lay out each phase, from initial drilling to potentially a sale or JV. Budget estimates are all part of this.
Yeah, exactly. And then comes the capital market strategy, which is super interesting. Choosing between public listings, private placements, or even strategic partnerships with major players.
Yeah, it's like picking the right vehicle for the journey. Can be TSXV, ASX, AIM, or others. Plus, you need the investor deck, executive summary, and all those key
Right.
documents ready. Next, you have to get your legal and regulatory advisors on board. They ensure compliance with securities laws, environmental rules, and the like. It's a must have to structure things properly.
Because one misstep there can derail the whole capital raise.
Absolutely. Then, step six is about the seed or pre IPO round, raising those early funds from founders, friends, family, and specialized mining funds. It's where you sweeten the deal with incentives like warrants.
Yeah, incentives, right? It makes the early rounds more appealing to investors. What's next on the list?
Step seven is all about marketing and investor outreach. Think industry conferences like PDAC, roadshows, virtual briefings, press releases, and even social media buzz.
I love that aspect. That's the point where you really start creating momentum and visibility.
Exactly, and then step eight is closing the raise. This involves finalizing those subscription agreements and regulatory filings, and then using the funds strictly as budgeted. Trust builds when investors see progress and consistent updates on things like drilling results.
Right on. And finally, step 9 tackles scaling up or even an exit strategy. Based on drill success, you might then raise a larger development round or move toward a merger, joint venture, or even a major exchange listing.
Yep, and as a bonus tip, there's smart advice on leveraging government grants or partnering with royalty and streaming companies to keep that capital structure tight, protecting shareholder value.
Definitely, that's a clever move. But I wonder, don't you think that sometimes the rush to close might lead to cutting corners, especially on compliance fronts?
That's a good critique, and it rings true. It's crucial to balance speed with stringent adherence to regulations. Rushing can backfire, so having solid legal backing and clear strategies is essential.
Absolutely.